Hi everyone, welcome to Clone Compounding, where our mission is to learn from others in order to achieve financial independence. This channel is dedicated to learning about investing from legendary investors, and there have been quite a few legendary investors in the past 50, 60 years. Most of them have followed fundamental principles and in the process developed, practiced, and shared quite some wisdom about investing for us to reflect upon and use in practice. In this video, let's have a look at 7 great value investors over the last 50 years. This will certainly be a topic of debate as not everyone might agree with these 7, but the aim of this video is to share more about these investors so we can all learn from their experience and wisdom. It will be great to know about who you would put in your greatest investors list, so please do put your views in the comments below. Before we start, please smash that like button so others can find this video as well, and make sure to subscribe to receive next videos. With that, let's dive in. Before we get to the list of investors, let's take a moment to look at what value investing is and why these investors are considered as greatest investors. Value investing, when boiled down to its core, is the attempt to buy a stock below its actual worth, in much the same way a bargain shopper would only buy items when they're on sale at a supermarket. Value investors attempt to value a stock using a variety of methods and looking at different metrics. When the real value of the stock, the intrinsic value, is above the stock price, value investors consider the stock undervalued. The difference between the current price and the intrinsic value is called the margin of safety. The greater the margin of safety, the less likely it is that the value investor is wrong in the assessment and loses money on the investment. While it's a simple formula to buy a company's stock when its market price is lower than its intrinsic value and sell when it's higher, the whole catch in investing largely lies in how to calculate or estimate the intrinsic value of a company. There are many ways to explore and understand the intrinsic value of a company. That is a topic for a separate video, which we will soon do, so please do subscribe. But needless to say that it is not straightforward to estimate this intrinsic value, and this is what sets apart great investors from not so good ones. With that background, let's dive in. Number 7. Mohnish Pabrai. According to Mr. Pabrai, you don't make money when you buy stocks, and you don't make money when you sell stocks. You make money by waiting. He is an Indian-American value investor, businessman, author of multiple best-selling books, and a philanthropist. He's the managing director of Pabrai Investment Funds, an investment fund based on a similar model to that of Warren Buffett's partnerships in the 1950s. Mohnish invests globally and is an active investor outside the United States with investments in India, China, Japan, and Turkey. Since its inception in 1999, it's estimated that Pabrai Fund has compounded at around 27% per year over the last 20 years. Currently, his only American position is a chip company Micron. In Europe, he owns Prosus, the company that owns around 25% of the Chinese giant Tencent. Number 6. Li Lu. According to Mr. Lu, investing is about intellectual honesty. You want to know what you know, and you want to know mostly what you don't know. He is one person that multiple investors on this list have publicly stated to be one of the best investors alive. Li Lu is a Chinese-born American value investor, businessman, and philanthropist. He came to the United States after fleeing China and received a scholarship to study at Columbia University, graduating with 3 degrees. It is here that Li Lu attended a lecture by Warren Buffett, and the rest is history. He invested and traded his scholarship money and grew it to $1 million by the time he graduated. Currently, he's the founder and chairman of Himalaya Capital Management and has reportedly produced a 30% compounded annual return since its inception in 1998. Top positions in his fund are Micron, same as Mohnish, and also Bank of America, Alphabet, and Berkshire Hathaway. Number 5. Joel Greenblatt. According to Mr. Greenblatt, we want to get more earnings for the price we are paying. Joel Greenblatt is an American academic, hedge fund manager, investor, and writer. He's an alumnus of the Wharton School, an adjunct professor at the Columbia University Graduate School of Business. He runs Gotham Funds with his partner Robert Goldstein. He wrote many books, such as The Little Book That Beats the Market. Check out the summary we did on this book above. In the book, he reported that from 1988 to 2009, the magic formula he created produced a compounded annual return of 24% versus 10% for the S&P 500. Top positions in his fund are S&P Index, Microsoft, Apple, and Alphabet. Number 4. Seth Klarman. According to Mr. Klarman, value investing is risk aversion. Seth Klarman is an American billionaire investor, hedge fund manager, and an author. He is a proponent of value investing and the chief executive and portfolio manager of Baupost Group, a Boston-based private investment partnership he founded in 1982. Long before Klarman became a billionaire, he wrote a book called Margin of Safety. The name is an homage to Ben Graham's security analysis book. In the book, Klarman laid out his value investing philosophy and how he would pick stocks. He laid out his exact strategy that would eventually lead to Baupost's phenomenal performance. His fund, Baupost, has produced a compounded annual return of 20% since 1983. He's outperformed the market by almost 4 times since he started the strategy. His top positions are Liberty Global, a telecom company, Qorvo, a chip company, Alphabet, and Intel. Number 3. Howard Marks. According to Mr. Marks, investing, like economics, is more art than science, and that means it can get a little messy. Howard Marks is an American investor and writer. He's the co-founder and co-chairman of Oaktree Capital Management, the largest investor in distressed securities worldwide. Mr. Mark is admired in the investment community for his memos, which detail his investment strategies and insight into the economy and are posted publicly on the Oaktree's website. He has also published 3 books on investing. None other than Warren Buffett has remarked that when I see memos from Howard Marks in my mail, they're the first thing I open and read. I always learn something, and that goes double for his book. His firm has had a tremendous investment history, producing 19% compounded returns since 1995. The top positions in his funds are Chesapeake Energy, Torm, and Star Bulk Carriers. Number 2. Charlie Munger. According to Mr. Munger, all intelligent investing is value investing, acquiring more than you're paying for. You must value the business in order to value the stock. Charlie Munger is an American billionaire investor, businessman, and former real estate attorney. He's the business partner and vice chairman of Berkshire Hathaway, the conglomerate run by Warren Buffett. He's also the chairman of Daily Journal and one of the directors of Costco. He's possibly one of the best investors of all time. Although Munger is best known for his association with Buffett, he himself created an investment company which generated compounded annual returns of 20% during the period from 1962 to 1975. This included a period of high inflation. His top positions are Bank of America, Wells Fargo, and Alibaba. Number 1. Warren Buffett. According to Mr. Buffett, never invest in a business you cannot understand. Warren Buffett is an American businessman, investor, and philanthropist. He is currently the chairman and CEO of Berkshire Hathaway. He's one of the most successful investors in the world and has a net worth of around $100 billion. Mr. Buffett has been the chairman and the largest shareholder of Berkshire Hathaway since 1970. He is noted for his adherence to value investing and his personal frugality despite his immense wealth. He's a philanthropist, having pledged to give away 99% of his fortune to philanthropic causes. From 1965 through to 2021, Berkshire shares generated a compounded annual return of 20% against 10.5% for S&P 500. His top positions are Apple, Bank of America, and Coca-Cola. All these investors have also been great teachers, sharing their learnings and wisdom widely. We are sure you will have other names in your mind. It will be great to see who will be on your list of greatest investors, so please do share in the comment section below. For now, that's it from us. Hope you enjoyed and learned from this video. Smash that like button and subscribe to receive more such videos. Thanks for watching.